$5,055, maybe even $6,000. These aren't numbers I made up for attention. This is the official forecast from J.P. Morgan, one of the largest and most influential investment banks on the planet, for the price of gold by late 2026. Welcome back to 24-Hour Gold. Today, we're talking about a hot topic. And I know it's hot because even without this forecast, the gold market has already had all of us holding our breath. As you can see, the spot gold price, according to this article's context, hit $4,381 this past Monday. That's a gain of nearly 57% year to date. This is a phenomenal rate of increase. And I understand how you feel. When a market moves this fast, how do we often feel? Natasha Kana, head of global commodity strategy at J.P. Morgan, used a very accurate word: paralyzed. We are paralyzed with fear. We have fear of missing out, FOMO. We fear we're too late. We fear this is a bubble about to burst. So the goal of today's 24-Hour Gold video is very clear. We aren't just going to report the news. We're going to unpack this report together, gently and slowly. We will explore, Part 1, what the cause behind the $5,055 number is. And more importantly, Part 2, what solution or perspective we should have in light of this information. Let's begin. So why would J.P. Morgan give such a bold number, especially when the price is already at a historic high? They aren't just guessing. They lay out a very clear roadmap built on 4 main pillars. The first pillar, and perhaps the most important, the Fed's rate-cutting cycle. J.P. Morgan states they see further upside as the market enters a Fed rate-cutting cycle. What does this mean, simply put? For several years, the U.S. Federal Reserve, Fed, raised interest rates to fight inflation. When interest rates are high, putting your money in a bank or buying government bonds gives you a good yield, say 5%. But what about gold? Gold pays no interest. It just sits there. So when interest rates are high, gold becomes less attractive compared to bonds. But, and this is the key, that cycle is ending. The Fed is expected to start cutting interest rates soon. When bank interest rates drop, say to 3% or 2%, suddenly bonds aren't so attractive anymore. And gold, the asset that yields nothing, is suddenly no longer at a disadvantage. Big investors start looking at gold and thinking, well, instead of holding depreciating cash, I'd rather hold gold. This is a historical relationship. Falling interest rates are often a massive tailwind for gold prices. J.P. Morgan is betting on this. The second pillar, macroeconomic anxiety. The bank uses 2 terms that sound complex but are very important: stagflation anxiety and debasement hedging. Let's talk about stagflation first. This is the worst-case scenario for policymakers. It's when the price of everything, gas, food, housing, is still rising, but at the same time, the economy isn't growing. Businesses stop hiring. People lose jobs. In that scenario, traditional assets like stocks will plummet. Your cash is being eaten by inflation. So where do you run? Historically, the answer has always been gold. Next is debasement hedging. This is a polite way of saying the government is printing too much money. When money is printed constantly to bail out the economy or finance debts, the value of every dollar you hold goes down. Gold is finite. You cannot print more gold. That is why, for thousands of years, it has been considered real money, the ultimate tool to protect your wealth from the debasement of paper currency. J.P. Morgan believes the anxiety over both stagflation and debasement is simmering, and it will drive investors to the safety of gold. The third pillar, the dollar story. This is a very interesting point that J.P. Morgan clarified. For years, we've heard about de-dollarization, meaning the world is trying to ditch the U.S. dollar from its dominant position. But J.P. Morgan says no, this is not that story. They call it a dollar diversification story. What does that mean? Imagine you are a foreign central bank, like China or India. You are holding trillions of US dollars. That is an immense dependency on a single country and a single currency. So logically, what do? You start to diversify. You don't dump the dollar, but you quietly, slowly shift a small portion of that massive holding into gold. The article states, foreign holders of U.S. assets are gradually redirecting small allocations into gold. A small allocation from a central bank is a massive number for the gold market, and that is exactly what's happening. Central banks have been buying gold at record paces, and JP Morgan believes this trend will continue. And the final pillar, the fourth, is pure market dynamics. Natasha Kana of JP Morgan summarized this perfectly. She said, "It's just a very clean story. You have a lot of buyers and you have no sellers." Think about that. We have central banks buying, as we just discussed. We have large investors buying because they worry about the Fed and inflation. We have retail investors buying because they see the price rising and are also worried. So who is selling? People who bought gold long ago, seeing $5,000 coming, do they want to sell? No, they're waiting for $6,000. People who just bought, they certainly don't want to sell. When everyone wants to buy and no one wants to sell, what happens to the price? It only has one direction to go. That's why JP Morgan is so confident, calling gold our highest conviction long for the year. They expect investor and central bank demand to average around 566 tons per quarter in 2026. That is a colossal figure. All right, those are JP Morgan's reasons: the Fed, inflation, and diversification. It's all very logical. But now let's return to that feeling of paralysis. I know what you're thinking. So should I sell my house to buy gold? Should I put all my savings into it right now? Or have I missed the boat? This is the solution part of 24-hour gold. And the solution here is not financial advice, but a perspective. First, breathe. JP Morgan emphasizes that gold should be viewed on a multi-year horizon. They are talking about 2026. They are talking about a long-term target of $6,000 by 2028. What does this mean? Gold is not a lottery ticket. It is not a get-rich-quick scheme for next week. People who panic buy gold today at $4,381 might be very disappointed if next week the price corrects down to $4,200. Markets never move in a straight line. JP Morgan even said that the recent consolidation, meaning the price stalling or dipping slightly, is healthy. It allows the market to digest the rapid price gains. So the solution that 24-hour gold wants to share with you is to change the question. Don't ask, can gold make me rich fast? Ask, why does gold exist in a portfolio? And the answer, as we've seen from JP Morgan's reasoning, is gold is insurance. You don't buy home insurance hoping your house burns down. You buy it in case the worst happens. You own gold not hoping the economy collapses. You own it in case stagflation happens or the currency debases. When you look at gold as insurance, as an anchor for your long-term financial stability, that feeling of paralysis and fear disappears. You stop obsessing over the daily price. Instead, you understand that you are holding an asset proven over 5,000 years of history, an asset that central banks and the world's smartest financial institutions are turning to when they see instability ahead. To summarize, JP Morgan's $5,055 forecast isn't baseless hype. It's built on three macro realities. The US Fed is about to cut rates. The fear of stagflation and currency debasement is real, and the world's central banks are actively diversifying into gold. For us at 24-hour gold, the message is clear. Don't panic, don't FOMO. Look at the big picture. Understand that gold is a long-term play, a wealth protection tool, not a speculation tool. I would love to know your thoughts. Does this $5,000 gold forecast make you feel nervous or optimistic? And how does it change your perspective on gold? Please leave your comments below. Let's discuss this civilly and constructively. If you found this video valuable and it helped you feel calmer amidst the storm of information, please hit the like button and subscribe to 24-Hour Gold. We're here to provide deep analysis, not hype. Thank you for watching. Stay safe and stay long-term in your thinking.